gateway to freedom. It is the gateway to helping to leave a legacy for my family.
And it does not depend on who I am as far as a race, being a woman, or anything of that matter. All it takes is someone who has a willing mindset. So I'm just so grateful to have a platform in my life that gives me not only a system to follow, but also a lifestyle that I can live, that I can enjoy, and I can pass down to the next generation.
What I want to do through WSB and through the financial platform is take that out into our communities to help our Black families understand and know that they too have hope to build a solid, firm financial foundation.
Even though I made good money, nobody educated me how to save money. I spent everything I made. I lived ghetto families in our Black community. What I've learned now here with World Financial Group is some concepts to help me learn how to save money. And that's what we need. Our Black lives matter here, and especially during this time, but it won't matter unless we are financially educated.
We can be empowered so that we can literally transition from where we are today to where we dream of being for ourselves, but for also our people.
Being financially free means that I'm not a slave to debt. I'm not a slave to emergencies. I'm not a slave to even my business. I control my time and I work on myself, and it allows me to be 100% there for the people when they need me.
Financial literacy is the way that we in the Black community will be able to bridge the economic gap and begin to pass down generational blessings instead of generational burdens.
Because of this campaign, my kids now understand finance. I find that quite powerful, and that's something that campaign can do for you and your family as well.
Being legacy-minded, having a sense of urgency for the now, and transparency in our community is the key.
It's time that we really take a deeper look on how we can change the world as a whole for every community. Everyone deserves financial education.
We need to learn more about finance. We need to understand some basic principles of how to build wealth.
And we want to be able to leave a legacy for our children and our children's children. And how can we do that? By being able to join this platform and learn from this platform and apply it to our family and our lives.
Okay, good evening, everyone. Thank you so much for joining us this evening. I hope everyone had a good day today. It was a beautiful weather outside, and you take that time out this evening to join us. So we want to thank you so much. So I'll start off by saying that my name is Shanti Mohanlal. I live in Pennsylvania. I'm from a financial background. I work in the banking industry for 9 years. And I was introduced to the business by Usha Singh, and she's a wonderful person, very knowledgeable of our products and our business. So when I got introduced to the business, I was shown a few things that I was amazed with, how to manage my money and the problem is not about how much you're making, but how much you're saving, how you put away your money for your future and your retirement. So I was amazed by a few products that I was shown, and I took a position in our firm a couple months ago, and I was amazed by it. So far, I'm amazed with all the information that we have learned and also all the products that we have to share and to help families. So our speaker today is Odetta King. She's a senior broker, 4 years in WFG. In New York business graduate, university professor, Odetta have helped over 400 families in WFG to today, and is a very active on all social media platforms. She's a financial author and of the book, If You in Stocking, Then You're Dropping. Odetta King is a beast and one of the top leader in our organization, who is extremely super passionate about financial educating our community. So with no further ado, I'll bring up Odetta King.
Thank you so much, Shanti. Hey, everybody. How's everyone doing tonight? By show of hand, how many of you are here today? I want to poll. I want to know, are you guys interested in learning how to make money or save money? Because I always like to get a poll of, who's really here for what? Are you guys here to save money or make money? What is it? You can unmute your mic and just share.
Make money.
Somebody said make money. Okay, make money. We like the sound of that. So is anyone else making or saving money? Making money. Good. Awesome.
Saving money.
Saving money. Who said saving? What's your name?
Uranda.
Oh, wow. Thanks for joining us, Uranda. Who invited you?
What's her name?
Leslyn?
Leslie, sorry. Yes. Leslie.
Welcome. Where are you based?
I'm in New York.
Oh, wow. Very nice. I'm here in New York too. So welcome. Shout out to all the New York folks.
Yeah.
Awesome. So guys, tonight you're in for a treat. As Shanti mentioned, my name is Odetta King. I am a senior broker here at World Financial Group. And guys, my story is no different than many of you that are on this call today, right? I was seeking an opportunity to save my money, believe it or not. Because some of us, we may have good jobs, we may have a good saving plan with our job, but for me, having a 401k is where it all started. I am an avid saver. I love to save money. I love to watch my coin stack. And this is why I wrote the book, If You Ain't Stacking, You're Dropping. Because you see, I'm one of those people, when I was working in corporate America, I would be checking my statements. Every quarter, when I get my 401k statement, I was on it, right? And I loved when I was making money, but when I was losing, boy, they were getting a phone call from me. And they would always reassure me, Odetta, you're young, you have a lot of years, don't worry, you're gonna make it back. Well, it didn't sit well with me. And, I figure, yes, I'm young, yes, I can make it back, but, what is gonna be my end number? What is gonna be that end number that I'm gonna have? Yes, I have 25 to 30 years to retirement, but I don't want to keep making money, losing money, making money, losing money. In fact, I don't even like going to the casino because I don't want to lose money, right? So when I go to the casino, I'm just going there to check it out, eat some food, hang around for the scenery, but I don't gamble because I don't want to lose. So that didn't sit well with me. And at the time I had saved up about $100,000 and I had that sitting in the bank. I'm not going to mention which bank. And I thought I was doing pretty good because, I was getting like 1%. And most people weren't even getting 1%. For you to get 1% back then, you had to have over 20,000. So I'm thinking, okay, I'm good. But every year when I get my statement from the bank and I saw how much interest I was making, one day I added up the savings, the interest, right? I added up the interest. I think it was like $80 or something. And then I multiplied that $80 times 20 or 30 years because I figure, hey, if I keep doing this for 20, 30 years, let me see how much interest that's going to account to in 20, 30 years. Has anybody ever done that? Just curious, has anybody ever done the math and projected your money for the future to see, well, based on what I'm doing right now, if I keep this up, how much am I going to have 30 years from now? Well, guess what? I did the math in my 401k and I was not happy with losing money. And I also did the math with the interest that I was getting on my 100,000 in the bank. And again, that's when it hit me like a ton of brick. I'm not going to be okay. I'm so not going to be okay, even though I have 100,000, right? And I didn't understand interest, compound interest, simple interest. I didn't understand where else to put my money, where I will never lose. And I didn't understand a lot of those things. But guess what? I knew that what I was doing was not going to set me financially free. So I started seeking opportunities to learn about money, right? I started going to, I'm a professor, so at my school where I teach, I started, making friends with some of the faculty, sitting in their classrooms, seeing what books they're reading. I started going to a lot of different workshop sessions when it comes to money management. And, yeah, it was good, but I was getting the same thing everywhere I go, right? Put your money here, put your money here, put your money in the stock market, put your money in the bank. And I already did the math, right? So fast forward at the college, one of the colleges that I teach, Kingsborough Community College, Angel, who is truly my angel. I cannot wait to have my millionaire baby because his middle name is going to be Angel, right? So Angel, who also graduated from the program, he showed up every semester. We would bring back students who graduated from the program, and we would ask them to share how has college prepared them for the real world. So he came, he did his presentation, and after the presentation, it's a networking event. So we were chatting with each other, and he asked me, hey, what else do you do besides teaching? At the time, not only was I teaching, but I was also a director of sales overseeing several hotels. So I was making pretty good money. But even though I was making pretty good money, something didn't sit right with me, knowing that my money is not working for me, right? So he lent me, if I could put my hand on this book, which some of you have seen before. I don't have it handy. Okay, so he lent me this book called Saving Your Future. It's proprietary to our organization. You cannot buy it on Amazon. You cannot buy it anywhere. You have to be affiliated with WFG or someone from our organization gift you that book. So he lent me this book called Saving Your Future. It's about 86 pages long. And the educator and me, I read that book in one night. And lucky for me, the very next day or 2 days later on, they had a seminar at Mercy College in the Bronx. So I showed up, right? I showed up just thinking, I'm going to go there, network with some faculty, check out the campus, and I went there. And what I saw on that presentation, I realized that I'm so not going to be good. No. I realized that if I stayed on that path, I'm going to be lost like everybody else. I'm going to be lost like the 95% who think they're good. Because a lot of us are still walking around thinking we are good because maybe we have $250,000 in the bank, or maybe we have 100,000 sitting somewhere in the stock market and we think we're good, right? But what I'm about to share with you guys today, most people don't even know, even people who work at the banks. Right? Even people who work in financial institutions, they don't know these concepts because why? They're not being taught these concepts. Because you see, if they are taught these concepts, we will all win the money game. Right? So I'm super, super, super beyond excited to share with you some of these concepts that I learned many years ago. And it's not anything that has, just came out of the blues. They've been around forever. But if you know it, you're winning. And if you don't know it, you're losing. So let's talk about 3 basic rules of money. Now, we say they're basic because we see this every day, but some people have never seen it, right? So when it comes to your money, there's 3 rules. And I did not know about these 3 rules, but something didn't sit right in my spirit with my 401k losing money and the money sitting in a bank earning a whole 1%. It didn't sit right with me, and I didn't even know the 3 rules of money. So when it comes to your money, there's 3 rules. The first rule is, many of you have heard about this gentleman. His name is Uncle Albert Einstein. Okay. Throughout this presentation, you guys are going to hear a lot about my family members because I come from a rich bloodline, right? So Uncle Albert Einstein, he came up with his formula. And a lot of you have probably heard about it. You've heard about Uncle Albert Einstein, but how does this tie into your money, right? So In order for us to know how many years your money is going to take to double, you have to take the number 72 and divide it by the rate of return, which is your interest. So let's plug this into your money. Let's say you have $10,000 sitting at the bank, and it is earning 4%, which we know no bank is giving 4%. Not even a CD is giving 4%, right? So 72 divided by 4 is 18 years. So your 10,000 that you have sitting in the bank today earning 4%, which is really not, it's going to take 18 years before it doubles to 20, and another 18 years before it doubles to 40. Guys, right here is why 99% of the population are going to be broke. They're not even getting 4%. And most people don't even have $10,000 saved up. I didn't say it, statistics says it, right? So you mean to tell me you can work your life for 36 years, and if you have 10,000 saved up, it's only going to double to 40,000 in 36 years. And what is 40,000 going to buy you? What is the purchasing power with inflation? How much goods and service are you going to get for 40,000? Or better yet, can you retire on 40,000? But let's go to the far right. Let's say you're getting 12%, which most people are not, right? They're not getting 12%. But let's say you're getting 12, 72 divided by 12% is now 6 years. So the same 10,000 doubles in 6 years. Whereas over here, the guy who's getting 4, it's going to take his money 18 years to double. Now, I didn't know about compound interest, but I already did the math on my 100,000 back then, and I knew that I was not going to be good. And most people have never even thought about their money like that. So the person who's getting 12%, every 6 years, their money is doubling. So now in 36 years, this person ends up with 640,000. Can we retire with 640,000? Absolutely. But what about a person who's going to get 40,000? That's the first rule, guys. You got to get your money to double in a shorter space of time. So wherever you have your money sitting right now, you need to find out what is the interest and divide it by 72. And that's how you're going to know if you're really good. And most of us are not good, but we think we are because we don't know this information. Now, he who understands compound interest is going to stack their coins. And he who doesn't is going to drop their coins. Why do I say so? You see, this rule also applies when you're borrowing money. If you have a loan, a mortgage, credit card, student loan, same concept. Take the interest and divide it by 72. So if you have a student loan or a car loan or whatever loan at 12%, every 6 years, that money that you borrow is doubling on you. Now, I never understood why people stay in debt for 30, 40, 20 plus years. But once I learned this rule, it made sense. Because you see, if you borrow 10,000 from the credit card company at 12%, and you don't pay back this 10,000 before it doubles in 6 years, now you end up winding up paying them 20,000. So is this important to learn this rule? Whether you're borrowing money or whether you're saving money. Because there's over 3 million today senior citizens that borrow money for their education over 40, 50 years ago, and they're still paying student loan even in their senior citizen years. That is a direct result of not knowing this rule, because anybody who knows this rule, they're going to pay off that loan before it doubles on them. Now, we also call this highway bank robbery, because you see, as long as we don't know this, guess who's winning the money game? Guess who's making all the money if we don't know this rule? The person who's lending you the money is making the money. They're winning. So why would they educate us? Because if we know this, we're going to pay it off before it doubles. If we know this, we're going to put our money where we could get 12% and not 4%. First rule to money, get your money to double in a shorter space of time. And if you're ever going to borrow money or you have any loan right now, do the math, 72 divided by whatever the interest is that you're paying, and pay it off before it doubles. Now I know that's easier said than done. And this is why we need to make more money, because the more money you make, you could put more money towards your debt, right? Second rule is taxes. And boy, they got us all twisted with this one. Nobody understands taxes. And guys, do you know in the IRS tax code, there are more rules that are showing us to grow our money tax-free than not. But again, who's teaching us this information? Why would the IRS educate us about this? Why would the banks educate us about this? Because again, if we know it, who's winning the money game? So rich people know these rules, and they're always taking advantage of it, because guess what? They make a lot of money and they sure don't want to pay a lot of taxes. So my second favorite uncle is Franklin Benjamin. Now you see, most people don't like this guy because he's always there when there's money to be paid out, because he's going to collect the taxes. So if you have a check-in, a savings, CD, stock, or a mutual fund, you're going to pay a lot of taxes as your money grows. You know, it's funny. I was talking to a girl yesterday on Instagram, and she said to me, Odetta, I got stocks, I got a pension, I got a 401k, I got crypto. And I said, that's great. But you know what? Those are all taxed now and taxed later. I don't hear any tax advantage. You know, I got her there because she didn't even know what I meant by tax advantage. So people who have their money in these buckets, you are paying the more taxes, because as your money grow, more taxes you pay. Simple. You see, this is why the triangle is getting bigger. The more your money grow, the more taxes you pay. I don't know about you guys, but I don't want to pay more taxes if I don't have to, legally, right? Now let's look at tax later. So how many of you have jobs? If you have a job and you're getting a good old 401k, like I sure was back in the days, or 403b, IRA, SEP IRA, annuity and pension. Now this is where they really get us too. And if you think your HR person is going to educate you, sadly to say, HR doesn't know herself, because she has these accounts for herself and she's getting everybody to sign up for it for themselves. But again, as long as we don't know, who is getting the break here? Because tax later, but you think of yourself as a farmer. If you are a farmer, do you want to pay tax on the seed when the money is small, or do you want to pay tax on the harvest when that seed has grown to a huge mango tree or whatever tree you want to call it, and there's tons of fruits loaded? Most people would want to pay on the seed because the seed is little. So you see here, Uncle Sam is saying to us, don't pay the tax on the seed. Don't pay it because your money is little. Don't worry, let it grow. Okay, that's good. I want my money to grow. But now when it grows to $1 million, $500,000, $250,000, or whatever it grows to, later your tax will be greater. Why would you want to grow your money and not know how much tax you're going to pay? That's like you coming to me and say, hey, Odetta, I read your book and I want to borrow 50,000 out of that 100,000. And I say, sure, I'll lend it to you, but I'm not going to tell you how much interest I'm going to charge you. When you're ready to pay me back a year or two from now, then I'm going to tell you how much interest. Would anybody ever borrow money without knowing how much interest you're going to have to pay back? Guys, this is what we're doing here. We're saving our money for the future. And we know it's going to grow because the market is going to go up. But the bigger question is, how much do you and I get to keep in our pocket 30 years from now when we're ready to retire? You see, I don't want to know that I have $1 million and I don't know how much of that million I get to keep. And again, I didn't know about these 3 rules, but back then in corporate America, when I had my 401k, it just didn't sit right with me that I'm growing this money and it's going down. So how much am I going to get to keep? When I'm 65, how much am I going to get to keep? That's the bigger question. If you have your money in these accounts, you do not know. So you're gambling with your future. You're gambling with your retirement. You're gambling with your kids' money. You're gambling with your own money. Because how much of this money are you going to get to keep when you are 65, 69, 70, or whatever age you're ready to cash out and retire? Another fun fact. Do you guys know what is the number one worry on people who are in retirement today? People who are in retirement today, their number one worry is that they're going to outlive their money. So you mean to tell me I worked hard for 40, 50 years and now I'm into retirement and I'm hoping that my money doesn't run out on me? What kind of retirement is that? That's going to be super stressful, right? So we don't want you guys to be stressed out in your retirement golden years. It's supposed to be golden. Y'all supposed to be turning up, traveling, going on cruise, having the grandkids over. Money should not be an issue. You don't want to be penny pinching because you work hard for 40 years. So it's about time to be enjoying it, right? But these are how these accounts are set up, right? Now let's go to tax advantage. Now, the word in itself, advantage, tells you it's a good thing, tells you it's positive, tells you there's a plus. So with tax advantage, you see, you're going to pay the tax today. You're going to pay the tax on the seed when the money is little. That $100, that $200, that $300 that you're saving away every month, pay the tax today. So your $300 can blossom and grow into a higher number. And Uncle Sam can mess with you 30 years down the road because you're really going to be stacked up then, right? Get him up, get that monkey up your back today so your money can grow and you can be free 30 years from now. So tax advantage is where the 1% have figured out. Tax advantage is where the rich know to maximize their accounts. And these are some of the accounts. So the lady that I was conversing with on Instagram, when she tells me I have pension, I have 401k, I have 457, I have cryptocurrency, I have stocks, and I'm like, that is great, girlfriend, but why is it all sitting in a tax now and tax later? She had no idea what I was talking about, right? But I'm going to have her in one of these webinars sometime soon. So this is the second rule, guys. So you see, I could confidently tell anybody, I don't care how much money you have, based on where that money is sitting, you could potentially still end up being broke. You could potentially, have $1 million today, but how much of that million you're going to pay in taxes? How much of that million you're going to lose when the stock market go down, right? It's not about how much you make, it's about how much you keep. But when you know this information, you know where to keep the money. Number 3, rule to money is investment. And everybody wants to invest, but they have no clue what they're doing, right? They don't know why they made money. They don't know why they lost money, but they're investing. If you have your money in the bank, it is safe, but it is safely not growing because you see, the growth is very minimal. You guys just learned the rule of 72. So do the math, right? Do the math. It ain't doubling ever in your lifetime. Even if you're getting that 1%, 72 divided by 1 is 72 years. We will never see our money double in this lifetime, especially if you're in your 30s or your 40s. 72 years from now, you're going to be ashes. You're going to be in the dirt. So we ain't ever seeing our money double with this fixed account if you're getting 1% in the bank. What if you put it in the stock market, right? Because a lot of us, they tell us, put it in the stock market. Well, there's some pros and cons. It could grow. Yeah, we like when the market goes up. But what about when the market goes down? Nobody wants to talk about that. Nobody wants to say, oh my God, I lost money. Nobody is talking about the loss. Everybody wants to talk about the gains, and everybody is tiptoeing and being quiet when it comes to the loss. But OdetteKing.com is going to show you where you can put your money, never lose it, and it is growing. And where is that? In index strategies. Index strategies, your money is safe and it is growing. So when the stock market go up, you go up to a cap, depending on which company. And when the stock market go down, you lock in your gains. So let's say you had $10,000 in your 401k and the market dropped, you no longer have 10. But if you had $10,000 in an index account and the market dropped, you still got your 10,000. You never lost a penny. How many of you have heard of accounts where you never lose and it could only grow? I sure didn't, right? So that's your third rule to money. Now, these index accounts, this is what it looks like. And this is how you know if you have a solid financial foundation. And again, this is why I can confidently tell people when they tell me where their money is sitting, I already know they might be good today, but I don't know about the future. I don't know about the future. I don't know about 5, 10, 15, 20 years down the road. You're good today, but how long are you going to be good for, right? And I don't want to be good for today. I want to be good for a lifetime. And even when I'm dead and gone, my kids and grandkids are still going to be good. That's what we want to share with you guys today. So you see the index account, your money is growing. It can grow up to 15%, guys. This is crazy. This is crazy. And your money is safe. So even the worst case scenario in this index account, you're getting more interest than the banks because the banks are not even giving you 0.75. They're giving you a whopping 0.06, right? So even the worst case scenario in this IUL index strategy is still way better than the bank. On top of it, it's tax advantage. And what did I say about tax advantage? Tax-free. Tax-free at any age. Tax-free at any age. For some of us that are younger, if you want to pull out your money from your 401k, your IRA, your SEP IRA, 403b, 457, do you know that because you're under 59 and a half, you're going to have to pay a 10% penalty to touch your own money? And you're going to have to pay the taxes. Here, it's tax-free at any age. You want to buy a house in 5 years, you want to pull out some money, send your kids 5 years down the road, you see an opportunity to start a business, open a restaurant, do whatever, you can touch your money at any age, tax-free, guys. On top of it, you also have protection. So 5 or 10 years ago, if you had told me, Odetta, get you some life insurance. I always had negative connotation about life insurance because, again, look at the people that I'm surrounded with. Look at the people that are telling me what to do with my money. They don't know any better. So be careful who you hang around with. Be careful who is giving you financial advice. Because most people that you and I know will tell us, don't get life insurance. But the rich know which type. It's a special type you want to get, right? But in any event, what are we protecting, guys? You see, there's different types of life insurance. And the type that I'm going to share with you tonight is the IUL. The IUL is the Index Universal Life. So first of all, you're going to protect yourself. This is not a debt policy. This is not a policy that you just pay for and somebody reap the benefit when you die. Oh no, honey, we're not about that life. We're going to protect ourselves first. We're protecting our health with long-term care, critical illness, terminal. You and I all know somebody who's been affected with COVID, cancer, heart attack, stroke, had some form of illness that knocked them out for a couple of months. They didn't die. They just got knocked down health-wise. Guess what? If you have this type of account, you have money coming to you. Can you guys go to your job and say, hey, I'm sick. I can't work. I need some money. The first thing they're going to be like, well, no. I mean, we're going to look at we're going to pay you out your sick time. We're going to pay you out your vacation time and whatever other stuff we can pay you out and probably some disability. We're going to pay you that. And once that's done, it's done, right? But what if you had this plan that will pay you out if you get sick and cannot work? True story. My cousin aunt passed away with cancer. She was battling cancer for about 4 to 5 years. So of course she wasn't working. Of course she wasn't paying her mortgage, and the bank and everybody knew what was going on. So they weren't pressuring her. But the day she died, everything crumbled. Kids had to get out of the house. And you know what? Every time somebody dies, the first thing that I always ask people, whether it's appropriate or not, did they have life insurance? Did they have life insurance? And sad to say, guys, what do you think the answer is most of the time? That lady that passed away with cancer, had she had a big policy, it could have paid off her mortgage, buy out that house, and her kids get to stay in that house, right? Had she had the right policy with long-term care, she probably would have been, being able to get other types of treatment. Another true story, Marcel, another Guyanese business partner of ours. She was doing this business. And when Marcel took ill with cancer, it took her down in a matter of 2 months. She did not have long-term care. Now, yes, if we're going to die, we're going to die. But you know what's the sad part? I tried getting her this policy. And at the time, she wasn't making a lot of money. And I kick myself up to this day for not pushing her, for not insisting on her. Do whatever you got to do. Eat some salt and rice. Do whatever you got to do and pay for this policy. I'm so mad at myself because when she passed away, I had a conversation with her and she was begging for money to go see alternative treatment. If she had a long-term care, she could have taken some of that money and go see alternative treatment because she's big on herbalism. She did not want to do the chemo. She didn't want to do the drugs. She didn't want to do the conventional treatment. And we found a place for her, and the place was costing like $5,000 for the treatment. And she died sooner because she did not have long-term care or the money to go see an alternative clinic to get a herbal treatment. Guys, it's crazy. So long-term care, you better stack up on this stuff, because yes, we're gonna die, but some of us, if we could hold on to life an extra month, an extra week, at least we know we fought it to the end, and it was not money that made us go sooner rather than later. So what are we protecting? We're protecting our life. We're protecting our health. And ultimately, yes, if we pass away, the money that gets left behind, we're protecting our family. And if we don't die right away and our family is good, we're protecting our money, because we don't want to lose when the market goes down. Right? So some people can save anywhere between 200, 300, and 500. Wherever you are right now, start with something, because something is better than nothing. Most of us are spending 200 per month on garbage. I remember when I was spending about $200 on cable per month. It's ludicrous. And I did that for like 20 years. Had I put that $200 in this strategy, I would have had in this strategy almost $117,000. Some of us are paying car payments, $300 a month, right? Some of us we're spending the money, guys. We're spending it. But what if now with this education, you can reposition and save that money and control your future by putting away $200 for the next 30 years? And it doesn't even have to be 200 for the next 30 years. You start with 200, and every year when you file your taxes, every year when you make more money, or you get a better paying job or something like that, you increase it gradually. Now, I'm going to show you another interesting 20-year look back. Now, as I stated, these companies that we work with, the maximum that you can get is 15% when you're saving your money smart. Worst case scenario, 0.75. So let's look at the last 20 years. Numbers don't lie, right? If you're investing in the stock market in the US economy, just S&P, American companies, S&P 500, or let's say you have a diversified portfolio, you're doing US, you're doing Europe, and you're doing Asia, right? In the last 20 years, let's say you had $10,000, 10,000, and you were putting this money in the stock market, your 401k, your mutual funds, 457, IRA, whatever. Your 10,000 in 2001 year, because the market did negative 16, you're down to 83. Right? Now, had you had that money in an index account, you would have made $10,075. Is that a big deal? Already you're started. So the market was down 16%, which means you will have lost if your money was in the market. But because you have an IUL or an index strategy, you actually made money and kept your 10,000. Now let's go to last year, 2020. If we continue with this number, which is all the years, in the last 20 years, your 10,000 that you started out with, if you were investing in the stock market in 2001, you would have ended up right now with 19,000. And mind you me, this 19,000 has to get taxed because you have it in a tax now and tax later vehicle. So yeah, you made 19, but how much of this 19 now, if you're going to cash it out today, how much of it is going to be taxed? Meanwhile, the person who had their money in an IUL started out with the same 10,000, and now 20 years later, we have 48,000. So you tell me, who's winning the money game? You don't want to ever lose. Number one rule to investing, according to my fourth uncle, Warren Buffett, never lose money. So when you have your money in the market with all the ups and downs, you're going to lose, you're going to gain, you're going to lose, you're going to gain. But who's adding it all up? Most people are not. We are, because we're in the financial service. So we're watching these numbers. So in 20 years, your 10,000 grew to 19. And if you had that money in IUL, your 10,000 grew to 48,000. Who's winning the money game? And this 48,000 is tax-free. You don't got to pay no tax, right? So if I come back to right here, this is what we teach families every Monday and every Wednesday. Everybody needs an IUL because you're already saving money, but are you saving it smart? This is how you win the money game. Your money is growing tax-free. Your money is investing where you can earn high interest. When the stock market go down, you never lose a penny. And on top of it, you're protecting your life. In the event, God forbid, something happened with our health in the next 40, 50, 60 years. So get in touch with a person who invited you today to say, how much do you want to start with this plan? How much can you afford to set aside every month, right? And for those of you who are looking for an opportunity to make money, we are also expanding and growing. We're throughout the entire USA and Canada. So even if you're in another part of the country, get in touch with us so we could show you the next step to also interview to see if you qualify. And I say qualify because we are in the financial service, which is highly, highly, highly regulated. You're going to go through a background screening. You're going to go through a background check, fingerprinting, because we're in the financial service. So for those of you who want to make money and share this information with your community, because everybody needs to know this, get in touch with the person who invited you guys so we could show you the next step on the business side and potentially having you come on board and share this information with us. I would say if you're a teacher, you need to do this. If you're someone that likes to share information, you like to help people, you have a heart of a service, get in touch with us because again, you don't want to be selfish. You don't want to just keep this to yourself. Now that you know it, share it. You know people that have these accounts. You know people that have a 401k. You know people that have a 403b. You know people that have an IRA, a pension, a checking, a savings, CD, stocks. You know people that have kids. You know people that got a house or want to buy a house. You sure know people that are in debt. These are all people that you and I can help with our financial campaign. So get in touch with the person who invited you. For those of you that are watching us live on social media, get in touch with us so we can show you the next step, whether it's either to save your money smart and become a client, or if you want to get into the business aspect to make money. I didn't start out to make money. I just wanted to learn and get help with my finance, but I soon realized that everybody around me needed this information. And I decided I'm going to get my license and do the business. And today I do this full time and I teach part-time. And the only reason why I still teach is because I can impart this knowledge to my 50 students that I see every semester and impart this knowledge to some of my faculty members who don't even know, and they swear they're good with their pension, which I do not subscribe to. I don't have a pension with the school. I don't have a 401k with the school. I refuse to get those things because I know better, right? And they're glorifying it, but I'm like, how much you gonna keep? How much you gonna keep when you're ready to retire, right? How much you gonna keep is the bigger question. So with that being said, we will be back here on Monday You guys will all get an email. On Monday, we're going to be having a special webinar talking about how now to protect your assets. I will say, if you don't have a will, you need a will. If you don't have a medical proxy, you need a medical proxy. If you don't have a power of attorney, these are all things that has nothing to do with debt, but we all need it. So if you don't have it, make sure that you guys register. All of you will actually get an email to register for Monday, 7 p.m. We're going to have one of our top flagship company called IA America Everest that's going to be showing you guys how to protect your assets. Now, you may say, Odetta, I ain't got nothing right now. That's okay, honey. You're going to get something in the future. You may not have a lot right now, but if you got kids, get your will. If you got money in the bank, get your will. Because again, true story with Marcel that passed away, she had money in the bank and we still had to do a GoFundMe for her. Why? Because her only daughter, Olivia, which by the way, I have to call and check up on her only daughter, Olivia, could not access her mom's bank account. You see, when you pass away, everything gets frozen. Everything gets frozen. They don't care that you're the daughter. You could bring your birth certificate showing that's my mama. Everything gets frozen. So if you don't have a will or you don't have a power of attorney, your loved one passed away, you ain't getting nothing. You're going to have to go to probate court. And that's a long story. You don't want to be in probate court, right? Because now it's you and everybody else coming after what your mama had, right? So Monday, make sure you guys are in the room, get registered for that. It's going to be dynamite. And if nothing else, guys, you're learning. You're learning. This is financial education. Put yourself in a position to learn about these things so you can better your own situation. And for the right people who wants to come on board, make money, share this with your community, have a conversation with us. Let's show you the next step to get you on board with us. So with that being said, I'm going to turn it back over to Shanti, who is going to close us out. Thank you guys so much. I hope you guys learned a lot, and don't let this fall on deaf ears. Get in touch with us. The minute we hang up this Zoom, pick up the phone and call the person who invited you and let us know, what are you interested in? Do you want to be a client and save your money smart, or are you interested in the business side? Thank you, guys.
Wow, isn't she powerful? That's some great information, guys. Thank you so much for your time, each and every one of you. Please reach out to the person that invite you, have a conversation, and start saving your money in the right place. Everyone have a great night. Thank you.
Thank you. Good night.
Good night.
Thank you all for coming. Good night.
Night.
Night, night.